So BNB has just recently broken the all-time high when valued against Bitcoin. And this is absolutely huge. And if you want to figure out if the trend is going to continue and if in the event of a pullback, where should we enter, then you're going to want to stick around for the rest of this video. And as a bonus, you're going to get a couple of pro tips throughout the video that will help you immensely with your trading. Now, if you take a look at this picture right here about the fresh air, this was actually shared on Twitter, a few days ago. And this was saying that, this is just like a for fun post and the in-depth analysis is going to come soon. This is that in-depth analysis. Now, the reason why I say that it's fresh air is because, well, the moment you go into price discovery, it's actually fresh air. There's really no prior point of resistance that could stop you from just absolutely taking off. And even though I say that, there is still a chance of, the price going to a pullback. And we're going to get into that right now. Immediately, usually when you go through usually when you break an all-time high against something, you tend to go for a little bit of a retrace, because oftentimes what happens is, most retail traders are going to look at this level, for example, over here and over here, and they're going to see, oh, price has just broke resistance. Not only that, but it is entering into price discovery. So when you combine both of these aspects, most people are going to just hop into longs immediately once the price breaks this level, because they think, hey, resistance is broken, time to go long. This is exactly when the market makers tend to reverse the market on you and trap all the longs that got in here. Well, they're just going to get wrecked, basically. So this chart is against Bitcoin. And if you just take a look here, I've marked out one level already, which is at 0.0158, BNB against the Bitcoin. And that is going to be the 1.618 Fibonacci extension from that swing high over there on the weekly chart to that swing low over there. And this is important because usually the 1.618 on the weekly chart tends to be the level that provides immediate resistance after something has gone into price discovery. You can mark that down as like a pro tip of the day. So if we follow this theory, then it could be assumed that until price goes somewhere close to 0.0158, there would not be any particular resistance against Bitcoin for BNB to take off, hence fresh air, And for BNB to get to that level, it's going to be about a 30% pump from current prices compared to Bitcoin. Now we're going to remember this number because right now we're going to go head into Binance coin against USD to figure out if this is going to translate over to the Bitcoin valuation. And immediately we're going to take a look at the weekly chart, and we're going to, there's often a lot of noise when you go onto a chart, and especially if it's a chart that you haven't seen before. So pro tip number 2 of this video is you always want to hop on to a higher time frame, right? The higher time frames always give you a much clearer picture and just cuts out all the noise and lets you figure out where the price is going to go exactly. And if we hop onto the weekly chart right now, then there is going to be these two levels that are, absolutely key. And this is simply just me marking out the swing high and the swing low of the weekly chart, because swing highs and swing lows, especially on the higher time frames, such as the weekly and the daily, represents areas of liquidity. And these levels of liquidity are important because the market makers tend to target these areas when they are repricing the asset. For example, the market makers and the algorithms believe that this asset should be repriced at a higher price, then this is going to be the ultimate target that they will hit before a significant retracement. And you can see this across every single asset class. They always target a higher time frame level of liquidity. And the moment you can figure that out, then that is the moment where you know where the price is going to. At least on the weekly chart, we can see that currently BNB is within this range and that range. So now that we have identified the weekly levels that we should be paying attention to, now we hop onto a daily chart. And this is pro tip number 3. When you start your analysis off on the higher time frame, it is always a smart thing to do, but the analysis does not end there, because the higher time frame simply gives you a bigger picture overview of what the price is going to do. In order to actually find an entry and to make sure that your analysis is correct, that's when you hop into a lower time frame, such as the daily chart, such as the 4-hourly, which we are going to do right now. Now, on the daily chart, you can see that market structure is definitely still bullish, right? In the sense that you have a higher high right there, higher low, higher high, higher low, higher high, higher low, higher high. So with regards to that, until the market structure shifts in the sense that until it breaks $240, you have no reason to assume that BNB is going to be bearish. In fact, what you do look for is an opportunity to get into a long, because market structure currently is still bullish. So to figure out where could be a reasonable area for us to look into getting into a long, I've drawn a fib from that swing low to that swing high. And you can see that the level the 0.618, the 0.705, and the 0.786 could be reasonable and absolutely like expected levels that BNB could pull back to before taking off and targeting the weekly swing high, or even just this 4-hourly FVG and the 1-day FVG. So taking a look at this, let's just dive into this a little bit. Now, what I simply mean by that statement is that price could retrace all the way back to $250 and it would still be considered bullish. So do not panic if you see price retrace all the way back here. In fact, if it does retrace all the way back there, you can literally just set like a long here, stop loss at that low right there, because you know that if that low gets taken out, then, price has already shifted into bearish market structure on the high time frame. And by that point, any kind of relief rally, right? Let's say it takes this out, any kind of relief rally, you're going to short that. You're going to short this and you're going to make really big money. Just like how initially when you broke market structure, for example, over here, right? You broke this swing high on this move right here. You also broke that swing high. On the retrace, I'm just going to put it into example for you. If you draw fib like that, you can see that the price came all the way back to the 0.618. Now, for the people who did not panic and who understood the high time frame bias, they would have bought here, right? Or just here or whatever. But the point is, you look for longs at this point because market structure has already shifted bullish. So if you simply take advantage of that, bam, you make really, really big money, assuming that you were patient enough to ride this wave all the way up. So the same thing goes for price at this point right here. So the levels that you're going to want to particularly focus on, in my opinion, is going to be the 0.618 at $263.40. Now, this is on the FTX chart against USD. So if you're trading on Binance or whatever, just just convert everything into that chart. And the reason why I believe that is going to be the key level is because of the fact that you have a fair value gap over here. A fair value gap simply is an area of imbalance left behind by the market makers when they are aggressively repricing the asset higher. This is what is left behind. You have a gap of pretty much no price action, and the market makers always, like, these algorithms are designed to bring the price back to these levels to rebalance the market. So not only is that a fair value gap over there, but you have a 0.618 sort of Fibonacci level. And in fact, right underneath there, you can see right there with that word, the previous monthly mid-range. So that is also another, just key point of liquidity that you could structure a long around. So if I were to do this, I have already set alerts, actually, if you can see on the right side with these orange lines. It means that when price gets to these levels, I'm going to be starting to look for longs, because I understand that the daily bias is towards the upside. So I look for opportunities to get into longs rather than, jumping into shorts, at least until, market structure shifts. So for me, I'm going to want to see some kind of a big pump right now at this on this very day as I'm publishing this video, because currently you have already taken out some liquidity levels. This blue box right here is also a 4-hourly fair value gap. And ideally, I would like to see price pump, but the way that you can confirm that the market structure has already shifted and is already returning to being bullish is you take a look at a 4-hourly chart. The moment you see a 4-hourly swing high get broken, for example, if price were to do this right now, immediately start looking for a pullback and to dive into BNB at that point, right? By that point, assuming that, this is sort of the swing low, you're just going to set your stop at the swing low. This is your retracement entry, and you're just going to target at least the previous high right here, as well as that fair value gap right there, which will give you about a 8 risk to reward trade. Again, a lot of this just comes down to being patient with your entry. For example, I mentioned this on my Twitter. One of the biggest obstacles for a developing trader is being too impatient while waiting for setups to fall, right? You never chase, you always let the trade come to you. Now that you understand that you're looking for a long, you don't FOMO and try to jump into the market and perhaps catch falling knives. What I've given you here is a structure and a framework for identifying when you should be starting to look for these entries. For example, this is a key level right here because that's a level of liquidity. Once you take that out, then you start looking for a break of market structure, right? You look for a new 4-hourly swing high to form a higher high, by the way, and then you start looking for the retracement, and that is how you get the highest risk to reward as well as the highest probability trades, because you're being patient, right? Everyone is trying to, Bitcoin's going to go to a new all-time high. Oh, BNB is going to go to a new all-time high, so I'll have to get in here, or blah, 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 blah. But this is all just noise. Until, everything that happens here is just noise. Until you break a key level, or until you break, for example, that key level, that's when you short, right? This is when you short, and this is when you go long. And the sooner you can understand this mentality of like being patient, one shot, one kill, like hunters are really patient people, right? They sit there and lie in wait for their prey for like ages. And the sooner you can adopt that mentality and not like FOMO into every trade, like trust me, that one tip alone is going to make you so much money. It's ridiculous. And if you want to fast track your trading progress, I suggest that you check out the private Discord group at theartofcrypto.co/our group. This is where you'll get to follow along with not only my trades, but the trades of my team, as well as get access to trading education that like you will literally learn a skill that's going to last with you for a lifetime. If that sounds like fun to you, make sure you check out the private group. Until then, may the gains be with you, my friend. Stay safe. Bye bye.